Hello everyone, friends. International financial markets have started to price in a new trade war. Over the course of this week, we've entered a period where tensions between America and Europe have escalated quite significantly, and a new trade war is on the agenda. And frankly, it increasingly appears that NATO has clearly entered a process of fragmentation, because the tension is extremely high. The tension between Europe and America has increased significantly. Especially after the latest moves, US President Trump announced that additional tariffs would be imposed on imports from European countries in order to increase his bargaining power over the Greenland issue. In response, the European Union is preparing a 93 billion euro retaliation. While these developments are weakening the euro and the pound, assets like gold and silver continue to rise on the first trading day of the week. Of course, US markets are closed today due to a holiday. That's why liquidity is low, and it's completely normal for volatility in the markets to increase. And today, with geopolitical risks peaking, gold tested the $4,690 level, breaking an all-time record. Silver also joined this rally, testing the $94 level. In short, America says that Europe should make concessions to us regarding Greenland, because we are protecting them. But Europe has already learned its lesson when it comes to concession and appeasement policies. Before World War II, when Hitler demanded a part of Czechoslovakia, Britain and France gave him what he wanted. In order to avoid war, they pursued a policy of appeasement and gave Hitler what he asked for. But soon after, Hitler occupied all of Czechoslovakia, and right after that, all of Poland. Then World War II began, and the European countries saw here that concession and appeasement policies do not bring peace. They only delay war. European countries are aware of this now, but they are not strong. That's why European countries will start investing much more in the defense industry. Besides all this, Trump also met with the Venezuelan opposition leader. An agreement came out of this meeting. They say, we will make a $100 billion investment. In return, the control of the revenue from Venezuelan oil will be entirely in the hands of the United States. In short, when we look at the news and the overall picture, geopolitical uncertainty continues to increase risk aversion. Assets like gold and silver keep hitting new highs due to safe haven demand. Meanwhile, in the stock markets, selling pressure is dominant in both Europe and America. Since the markets are closed today anyway, low liquidity is also increasing volatility in the futures markets. So how is all this reflected in the charts? What did the markets look like at the weekly opening today? Let's take a look at these on the charts. Before we begin our deep dive today, as always, I'd like to ask for your valuable support and engagement with likes and comments. You can support me against the complex YouTube algorithms and bots by simply liking and commenting. I want to say a huge thank you to everyone, whether you choose to support or not. Now, first of all, when we look at the American stock market side, the NASDAQ 100 is currently open in the futures market and is facing about a 1.5% drop in the futures. Looking at it as an index, it started the week with a sharp sell-off. It has also entered a dangerous zone. If you remember what I said in the last period, I mentioned that investing in the American stock market during this time is risky. In fact, during December and January, the American stock market index did not provide any gains to investors. And right now, we see that it is technically below the 25,400 level. If it stays below this level tomorrow, I think the selling pressure on the American stock market could increase even more. This selling pressure is especially present in technology-heavy stocks. Look, when we look at the S&P 500, the S&P 500 has not yet fallen below the cloud indicator on my chart, but technology stocks are facing even more selling. In fact, recently, the place that made investors the most money has been technology stocks. And during this period, the biggest outflow of money has also been from American technology stocks. If we look at it from the gold side, I made a comment to you last week. I said, I expect the upward trend in gold to accelerate even more next week. We saw this expectation come true on the first trading day of the week. Gold made a strong start to the week. Silver did the same as well. As a trend, with closings above the $4,547 level, gold has now found a new area for upward movement. The events I just described and the new problems that will arise will continue to trigger the rise in gold. Of course, silver is accompanying it as well. If we already look at the situation from the perspective of investors fleeing risk, we will expect the rise in gold to continue. Silver is already gold's leveraged cousin. Its rise continues in the same way as well. But it's important to clearly distinguish the difference between them. If the movements we expect don't happen and things go in the opposite direction, what kind of losses could we face? When we look at the situation this way, it's very likely that those holding silver will face greater losses. It's very likely that those holding gold will face smaller losses. So the situation is extremely simple. When you make an investment, when you buy something to make money, you need to act by anticipating the risks as well as the opportunities. That's why if we go through a period where these markets move in the exact opposite direction, just as an example, if something happens that we didn't expect, gold might lose 10 to 15% of its value, but silver would lose at least 30%. At least that's my general perspective. So the smartest thing to do for seeing this is to balance these assets well within your portfolio and position them correctly. If you ask what it means to position them correctly, in my opinion, holding mostly gold would be a more logical move. Of course, for investors who want to earn more than just from gold, for those who say they want to earn more, I mentioned the leveraged fund with the code UGL as an option. That fund also continues its upward trend. The $59 level serves as support. If we return to the spot gold side, when we look at the chart in the 4-hour period, the level of around $4,550 is a strong support. I do not expect gold to drop below this level and show a decline. In my opinion, this is what you should keep in mind when investing, because these potential buy levels have worked very well for me in the past. Previously, these levels were at $3,900, $4,000, and then at $4,300. Now, this level has moved up to around $4,500. In the coming period, it will continue to make money for gold investors. A similar situation actually exists for silver as well. In my opinion, acting by anticipating the risks is very logical at this point. I told you that I would continue to update the support levels as the upward trend continues. Look, the last support level for silver was $84. Now, this level can be considered as $87.50. What does this mean for us? If the support level is lost, it can be reasonably concluded that the uptrend in this asset has come to an end. At least that's what it means to me. When we talk about support and resistance levels, losing or gaining those levels opens the door to new trends for us. And if we look at this specifically for gram gold, in the Turkish market, gram gold is priced around 6,500 TL. For me, the new trend clearly started here. According to the cloud indicator, we can say that the 6,500 TL region will act as a support zone for gram gold. On the TL side of silver, this level is now around 121 TL, and here the 115 TL to 121 TL range can be considered a support zone for gram silver. Look, when we look at Borsa Istanbul, we see that the upward trend is continuing there as well. Of course, investors are not very satisfied with the stocks in Borsa Istanbul because the stocks haven't really kept up with the index in terms of rising. But still, we see that the upward trend in the index continues. Look, I made a comment to you before. We talked about this at the beginning of December, and I kept explaining it to you afterwards. I had told you that during December and January, the American stock market would be in a worse situation than Borsa Istanbul. In other words, Borsa Istanbul would yield more profits, and that you should adjust your strategies accordingly. If you check December and January, while the American stock index and its shares experienced a very flat trend, even one that didn't yield any gains, we saw a more positive situation in the Borsa Istanbul index and its shares. And I think this trend will continue in Borsa Istanbul as well. And I would like to mention that on the 4-hour chart, the current support level is 12,100. When we look at other commodities, if we ask whether the healthy trend in gold and silver is continuing, for example, there's a new trend forming in platinum. If it manages to surpass the $2,470 level, platinum will have set up a bull flag trend for itself here. With this bull flag movement, we can say that it could start a new upward trend of around 30 to 40%. If we look at its support level here, it can be seen as the $2,200 level. There's no similar situation on the palladium side. The $1,690 level continues to act as support there as well. Now let's move on to the cryptocurrency side. Let's take a look at the cryptocurrency market. Among all these rising trends, the cryptocurrency market has been one of the least priced in areas recently. Last week, Bitcoin and the major altcoins started to join in the rise of commodity assets. But in the last 3 days, selling activity has become active here again. The increasing tensions between the European Union and the United States are actually forcing risky markets to sell off in the short term. Consequently, many investors are looking to invest more in safe havens. But here, Bitcoin is actually an alternative asset in terms of being a safe haven. So even though there is short-term selling pressure, I think the upward trend in Bitcoin will continue. At least on my indicator, the cloud indicator has reached as high as 90,500 and has even gone above that level. I think Bitcoin will continue to hold this level. It has now become a strong support level for me. There haven't been any major changes to talk about for Bitcoin or the cryptocurrency market recently. The only thing I see is that Bitcoin is in a large gap area between $90,000 and $100,000. So I don't think there's any resistance ahead anymore. I mean, I don't think there's any resistance in the short term. In my opinion, if Bitcoin holds the $90,500 level, its next target will be around $101,000. When we look at Ethereum, it also couldn't surpass the $3,380 level and took a hit downward from there. It's still trading above the cloud indicator. At this point, we can now see the support level as $3,100. In XRP, however, the selling pressure was even greater compared to Ethereum. It dropped below the cloud indicator and is now trying to find balance around the $2 level, completely erasing its recent gains and moving in the opposite direction. In fact, as we continue to analyze altcoins moving downward from here, we see that the selling has increased even more. Investors in small altcoins are really getting crushed. The clearest indicator of this right now is the total 3 chart. On the total market cap chart for crypto, excluding Bitcoin and Ethereum, there's a movement just like the one we saw on XRP's chart a moment ago. So in general, altcoins haven't made their investors happy at all, and most of the recent gains have been wiped out here. Only Bitcoin and Ethereum have shown somewhat more positive movements in this area. Honestly, I don't have much more to say about the cryptocurrency market. I really don't want to drag this out, because while other markets show compatibility between technical and fundamental levels, I just can't see that harmony clearly in the cryptocurrency market. Because in my opinion, Bitcoin should be at least in the $95,000 to $100,000 range, where it is right now. In other markets, the trends I expect and want are going quite well. The only place that's not going as I want right now is still the cryptocurrency market. And in my opinion, this positivity needs to increase. But just because we want it to increase doesn't mean it will. Still, as investors, we've leaned back, diversified our portfolios, and we're continuing to wait for more gains and for the crypto market to recover. Other than that, there's nothing else I can add. No matter what the prices are, I hope you're doing well. See you in the next video. Take care of yourselves. Subscribing to my channel and turning on notifications is an investment advice for yourself, with the intention of informing you about developments before they even happen. See you again soon.